Hello, welcome to Financial Insider Weekly. I'm your host, Michael Gray, CPA. My guest today is Lori Graymont. Lori is the CEO of Summit Assets Group. Summit Assets Group is a company that helps investors with opportunities with bulk bank foreclosed properties, which are also known as REOs. Now, Lori has been working in real estate for 21 years, since she was 3 years old. She started out by helping her mother and father rehabilitating properties, so they would basically buy properties, fix them up, and sell them. She's really good with a drill and a hammer, and she says her husband married her for her power tools because hers were better than his. Lori, thank you for being my guest today.
Well, thank you for having me.
And today, Lori and I are going to be talking about real estate investment alternatives. And the reason I chose Lori to do this is because she has been doing this for years, so she's basically seen it all and had a lot of experience in a lot of aspects of real estate investing. She does coaching, so if people are interested in real estate investing, whether with REOs or whatever, she can sort of guide them along the way to learn the business, and then they can move profitably along and hopefully avoid stubbing their toes so much as they get started.
Exactly.
Okay. Now, as we start with this, I'll just caution you again, this is an introduction to a complex area that requires a lot of study and due diligence. There are people that charge thousands of dollars for seminars for the types of information that we're going to be just sort of introducing you to. But the reason why I say that is, one, I don't want you to discount what we have to say here, but on the other hand, I want you to understand that there is a lot of scope to this to really get into it into a lot of depth. So obviously we're not going to be able to do that today. But real estate today is an area that's getting a lot of people's attention. I think they can sense, well, there's an old friend of mine that used to say, when there's blood on the street, there's money to be made. And we're seeing an awful lot of blood on the street. Yeah. So there are some great opportunities that are around. On the other hand, we've seen what's happened to other people, so you need to be aware there are risks that are involved in this as well. And so it's good to get some education and some information before you get started.
Absolutely.
Yeah. Okay, well, why should people be talking and thinking about real estate investment alternatives right now?
Well, as everybody knows, the market right now is in an uncertain time. The country is in an uncertain time with the debt ceiling. And so oftentimes during periods of uncertainty, we go to hard assets. And so you'll see people buying precious metals. But another hard asset is real estate. People need homes, places to live. Mm-hmm. And the best time to buy is when the pricing's low. Mm-hmm. We are lower in pricing for the most part in most of the country than we were last year. And I just read something that says that they don't expect a recovery to start on housing prices until 2014.
Wow.
So that means we have a potential buying opportunity like never before. Buy low, sell high.
Right.
Now's the time to be buying.
Okay. I guess another reason is that, again, people are a little disenchanted with conventional investments, securities, and so forth. The stock market is a little,
Yes.
It's been shaky up and down, and it makes sense, really. We're not saying you need to be out of the stock market, but we are saying it's good to be diversified and have a variety of different types of investments.
It's always important to diversify your investments, and even your portfolio of real estate you should diversify. So when you buy stock, you should also be buying homes. And one thing that we know from history is that the value of homes goes up faster than the rate of inflation. And what are we experiencing right now? Inflation. Gallon of milk has gone up substantially. I know this as I have a few children that drink it.
Darn.
So, it's time to start buying the real estate so that we can hedge against the inflation risk that we're going to see in the future too.
Mm-hmm. Mm-hmm. Okay, well, let's talk a little bit about some of the different alternative ways of investing
Okay.
in real estate and some of the advantages and disadvantages of each. So why don't we start with rental properties?
Okay, so the typical way that people invest is they find a rental property, they go get a loan, they put a down payment money in, and then they put a renter in.
Mm-hmm.
And while that model works, it's harder nowadays to get that type of financing to buy as many as you maybe want.
Mm-hmm.
But you can still do that, and that's still the traditional way. The question comes in is if you don't have a renter, who's going to pay that mortgage?
Yes.
And so you need to look at some alternative methods that are out there to make sure that you, one, will get the rent, or two, are protected against the downside of not getting the rent. And so we've come up with some different strategies that we use in our business, and we can talk about those in just a little bit. Mm-hmm. But that model is a sure, steady path for building wealth. You just have to be able to cover the cash flow issue if you don't have a renter.
Right. So the best laid plans of mice and men often go awry. If you lose that renter now, how is that mortgage payment going to be made? You don't want to be the next foreclosure.
That's it, especially in this economy. So it's so critical to plan, plan A, plan B, and make sure you're ready for any cash flow crunches that may occur.
Mm-hmm. So when we're talking about rental properties, how does residential compare with commercial?
Well, right now, the residential market is what you hear a lot about, but the commercial market is suffering just as much. If you open your eyes as you're driving around, you're going to see tons of commercial properties sitting empty. And surprisingly, they're being foreclosed upon, and the banks are trying to sell them just like they're trying to sell the residential. Unless you're in a metropolitan area, you're going to be suffering some vacancies. And so it's a hard market to be in right now if you're in commercial. It's something that I would say wait until you start to see recovery of the residential market before you jump full-fledged into commercial, because it's usually lagging. So that's just my opinion.
So you may actually find that it's harder to rent and keep the renter in for a commercial property than for
a rental.
Mm-hmm. And for even these large shopping centers, if you lose your anchor
yes.
tenant, then replacing them may be a real challenge.
It's absolutely true. You can see it in just about every city you go to, that the anchor is gone, and all of a sudden all the small shops that were there are also gone. Businesses are suffering in this economy too. And so they can't stay afloat if they're not selling enough. And so they close their doors.
So think of the people, I'm trying to think of a couple of, what were big players in the commercial real estate area? So think of Blockbuster.
Mm-hmm.
Okay, you thought, Blockbuster can't lose. Okay, that's going to be a great tenant, it's going to pay me for life.
Mm-hmm. And
it disappeared.
That's right.
How about Borders?
That's right.
Okay, wonderful. My wife talks about how she misses Borders, and that she used to go and just sort of hang out, here at Santana Row in Silicon Valley, and that was the place that she felt I could buy a book, I can't buy a lot of other stuff there. So anyway.
Well, and in our town, we lost 2 major anchors and 2 major malls. We don't have a large town, but we lost Circuit City.
Okay.
And so many of the small vendors that were around that area, and it's sitting vacant. Mm-hmm. And then we lost Mervyn's, and that entire mall, except for Walmart, is now empty. Walmart moved in after Mervyn's, and so hopefully we can see some rejuvenation come back to that mall. But it sat empty, the whole thing, for a year.
Yeah. So you think of these players, and they look like they're indestructible. You think, big corporations. But actually, when you have these big tenants, you're kind of vulnerable.
Yes.
Because they have, one, they can just move, but the other is even if you have them, they may suffer reverses, and suddenly they're closing locations, and it might be yours.
Yes, exactly.
Okay.
So on the residential side, there's different methods that you can use real estate for. You can look at real estate as a fix and flip type scenario, mm-hmm. or a buy and hold. So your rentals are buy and hold. And so, if somebody's looking to do fix and flip, that's another thing to always make sure that you've got your alternative plan in place. Because here, especially in the Bay Area, I've heard of a lot of people will go out and they'll buy a property, they'll rehab it, they'll put it on the market, they get an offer, and the financing of the end buyer falls through.
Uh-huh.
So then they have to put it back on the market. And they'll get up to 3 different times that it'll go into contract and fall through before it finally closes. And by then they've had to carry that property all that time, and so their profit's gone.
Yeah. So I guess the key on all of these is always what we're saying is buy the property right, okay, and don't get in over your head.
And make sure you have plan A and plan B.
Yeah, okay. So, but we talked about the buy and flip or fix and flip, but so buy and flip is what you're hoping is to take advantage of, you got a good price. You're not necessarily looking to make a whole lot, but you're looking to make something by moving the property quickly. And so for those, though, in some ways it's the least risky because you're not holding it for a long period of time.
Right. If you're going to do wholesaling or buy and flip, what you do on that deal is you will typically have your end buyer lined up before you even go into contract with your seller. And that way you're taking it from the seller to the end buyer and making a small cut, but the risk is minimal in that type of deal. Versus buy, fix, and flip. When you have those fixing costs in there and the element of time that it takes to fix, you don't know if the market's going to go up or down. It's not as surefire of a way. Yeah.
So the buy and flip then is wholesaling.
Yes.
And in some ways, though, you really need the most knowledge for this. It's helpful to have connections. So
Yes.
like you said, I mean, you may have, well, one, you can build a list of buyers.
Yes.
The other is that you have maybe know other people that they're looking, in a sense, to resell as well. So now you can sell to them, they can go and sell and so forth. But meanwhile, you've got a list of people, of alternatives already lined up. And again, it is a business.
It is a business.
Yeah.
All of the real estate investing has to be looked at like a business, not just simply an investment. And I tell people that because they assume that they can do one action and there will be cash flow forever. But no, you have to put effort in occasionally, and you have to manage either people, the asset itself, the money, the expenses, and so management comes into it. You can't just let it go and not perform.
Darn.
I know.
Okay, well, how about real estate partnerships?
Okay, so there's a lot of different ways that you can partner in real estate. One of the more common areas that we see around here is there's people who have 401ks or IRAs that are sitting there not doing a lot of work, but they work a 9 to 5 or in this area 9 to 7, and they don't have time to manage it like a business. And so they'll partner with somebody that they trust to manage the real estate business for them. Other types of partnerships are more professional, SEC kind of regulated partnerships such as TICs or syndications, which are done through private placement memorandums. And the risk in those is typically a little bit less depending on the return. Always be worried if your return is astronomical, because that means your risk is too. So you're going to kind of look at it from that standpoint.
Yeah.